Baehr joins us, head of product at CoinDesk Indices. Is it madness over there right now, Andy? What's going on?
We've had a busy couple of weeks, yeah. After Bitcoin's champagne moment last week, a lot of eyes are on the Fed next week. We, like everybody else, is expecting a rate cut. But really, what's driven? I was listening to the earlier segment. Is that big in your world,
Andy? Is the rate cut thing big for coiners right now? Have you guys
totally
said we don't care about that stuff anymore? We got the SEC on our side.
No. I think we got to think of Bitcoin in I guess a couple of different ways. From the macro side, we care about expectations of real rates. So we care about nominal rates minus inflation and what people expect in the future. So an easing cycle is great, but the risk that inflation might be higher in the future is also great, right? So we don't like yields necessarily going up. We do like being in an easing cycle, but if we're in an easing cycle, yet there's the specter of higher inflation and the real rates go lower, that's exactly the time that for a store of value, whether it's Bitcoin or gold, you get interested. You noted earlier the detached, so that's the macro side.
Let me jump in on that too, because that's such a key point, Andy, a big one, because so many years on, I still hear it described this way, including by Jerome Powell himself, who said it's more like gold. Has something changed? Because I admittedly haven't run the math in about 6 months, but the last time I did, there was no observable correlation between real rates and Bitcoin. All of that real rate relationship still was attached to gold. Has something changed in your math in the last 6 or 7 months, or am I wrong?
Oh, yeah. I mean, gold is old, right? And Bitcoin is new.
But I'm talking real rate correlations. Are they there?
Totally. They will be there, but what's overwhelmed all that, which is the second kind of real driver of Bitcoin,
so you said they will be there. So you're expecting that to happen for Bitcoin to start correlating with real rates?
With expectations of future real rates. That's right. With forward real rates. And think about it, right? Because you're thinking about alternatives for financing. You're thinking about a limited supply asset. You're thinking about something that's very easy to transport. Now, the difficulty in making that be really tick by tick equal to gold is that Bitcoin's just 16 years old, and the adoption rate is so fast.
That's fair.
That anything that changes that adoption momentum is going to instantly overwhelm in the very short term the correlation to gold. So look at what's happened, this year.
Andy,
ETFs.
Sorry to jump in. I got one more last thing. I appreciate that because I think this is so important. Because when you say that it will get there, that logic is fair. The argument too about gold having a longer time history is fair. That correlation is likely to show up. The thing that I found most interesting is that when I looked at the relationship over time, the Bitcoin's correlation is not only not there to real rates, it hasn't gotten closer to real rates since its inception. So is there something here particularly in the next 12 months that's going to really lock that in this time?
I think the time frames can be different because the trading patterns are different. So again, it's not real rates today. It's what different cohorts of traders and investors and hedgers think about what real rates might be in the future. So a lot of people felt like when inflation went up after in 2022 that Bitcoin failed because it didn't triple or something like that when inflation was going higher. But in fact, the rally before that, in anticipation as cash flooded the market and inflation was anticipated, that's when Bitcoin was strong. So it's a little bit hard sometimes to make the timelines match up so much, and there's so much going on for Bitcoin's need for liquidity and need for adoption right now as a young asset that can sometimes make those charts hard to look at. But as Jerome Powell said, being a gold alternative, what properties does it have? It has a limited supply. It's easy to transport. It's fixed ultimate supply, and basically is not subject to the monetary policy of our government. So it can't be printed more to rescue an economy. It's just going to be what it is. I think over time that relationship and use case will solidify right now, but so many things have happened in the last quarter that have accelerated the adoption momentum of Bitcoin, that's basically overwhelmed everything else.
Fair enough. Andy, where would you rank the possibility of a Bitcoin reserve? There were rumors floating around that Japan was thinking about it, but then earlier this week, Microsoft said no to Michael Saylor. So that seems to have moved from what Vivek told us was a thought, an idea, sort of a concept, whereas maybe it's actually reality.
And I think there have been some state level bills that have been passed. So many people are talking about this that if you think 5 years from now, if it hasn't happened, why hasn't it happened? There's a lot of momentum in different places in the world for that to happen. Look at what's happening with MicroStrategy today. If it gets into as it gets into the NASDAQ 100, people will own Bitcoin, through this company's balance sheet. And that's $500 billion worth of product that are benchmarked to that index. So it's when you have an asset that has these kind of properties and has this a right-tailed kind of return distribution, meaning it tends to melt up, not melt down, it's going to find its way into more and more portfolios. The fact that the president-elect is talking about it, the fact that it is really above the fold news over the last several months, certainly since the election. The fact that digital assets are mentioned as one of the reasons why a certain pick for the incoming SEC chair, or the nominee for that, was chosen. This is all making it kind of more and more okay. So I don't think 2 years ago you would have had a presentation to the board of Microsoft, and now you have. So we always have to be patient. We are so early on. Still, people think, am I too late? The funny thing is, the more time that passes, the more it's the best time. So one of our three huge predictions for next year is that this adoption momentum will continue.
One of the things there I have to contest a little bit is the notion that the later it gets, the better it is to get in. Because the other thing that makes me scratch my head on BTC is that even with every new high, the relative strength and momentum has actually been going down with each breakout, just by nature of the level we moved to being a smaller percentage gain than from the last breakout. So I don't think technically that math there is correct right now. Later being better. Well,
I think the analogy I make is that I have a 16-year-old son, and there's things that that I let him do on his own, with his own money, that I wouldn't let a 7-year-old do. And I think people think about that when they think about digital assets too. Bitcoin being 16 years old and having the breadth of ownership right now that it has. It becomes easier for people to think that it's okay. The fact that we have options now in the United States on ETFs and index options makes it a more palatable thing for people who require risk management.
Agree.
I think another way to interpret your observation about sort of some of the highs being less spectacular than the older days is that I think we think that Bitcoin volatility is going to continue to decline. As adoption momentum increases, the volatility of Bitcoin will decline, and we'll get much closer to equities. It's actually pretty close to where some high-flying equities are now.
Sure.
So 100 vol Bitcoin is probably, for the most part, a thing of the past. As Bitcoin becomes less and less volatile, I think that will allow institutions who risk allocate to assets to take bigger pieces.
Okay.
So that's going to, again, increase adoption momentum when you have fair. Bitcoin that's, 30, 40, 50 vol instead of 60, 70, 80. They'll say, well, I can take more of it for the same spending of risk.
Yeah.
And I can still enjoy its properties and its right-tailed distribution.
Those are two good points, that the more liquidity and more enhanced tools allow people to use risk management. So that is being better. That has improved with time. And then also, if we do see the volatility subside, then that certainly would increase the case big time. However, the expected returns, the later it has been in Bitcoin, have been smaller, but understood there's different ways to think about it being the best time.
Yep, it's only doubled this year, so maybe next year will only go 50%. So you'll have to just just grit your teeth and bear a 50% return.
Totally, understood. Right. Andy, thanks a lot. Appreciate your time.
Great.
Great conversation. Really enjoyed it. Thank you very much.